from Europe to Asia. Take into account that the base is lower. I mean, making fun a little bit of this unpleasant monetarist arithmetic, here you have some unpleasant public finance arithmetic. So the needs of reduction of public expenditure is going to be larger than a situation in which we have a normal cycle, because we have a permanent cut in the cycle, in economic growth. And this unpleasantness, if you calculate, this is, I have stacked up the difference between our forecast on GDP and European Commission assumption, plus our estimation of the fiscal multiplier. In brief, this is the additional need in reduction of government expenditure that you will have from some countries. And you see that Spain, if it has to do everything through a reduction in government expenditure, the reduction would be quite substantial. And you see the reduction that are needed by other countries in the European Union. So this is unpleasant enough. And I think this is going to affect the economy. The economy in the Eurozone significantly. Look at this red line, which is our forecast, probably maybe a little bit too pessimistic, but you know, it's a little bit journalistic, if you allow me the term. We're not probably going to have zero growth, but we're going to have something like 0.3 or 0.5. We still have zero as the first digit. And here is the same graph for France, Italy, Germany, and Spain. And you see that apart from Italy, which is my country, and for once is not at the center of the attention, all the other countries, you see a significant reduction in GDP forecast with respect to the assumption that were made at the European Commission. So this is really in the numbers. So let me conclude with what this means. What the financial contagion that becomes a macroeconomic contagion means. The first thing is what it means for Europe. And of course, there is a debate. And optimistic people say this is finally the wake-up call for European leaders to come up with a new fiscal organization of the Union, with more federalism, with all those things that lacked on political cohesion of Europe. And so this is going to be the wake-up call, and from now on we are going to see a much more sustainable Europe, because European leaders will agree on something that is more sustainable in the long term. And then there is pessimistic who says this crisis really showed, I mean, the package for Greece kept European politicians busy for 7 months, which is quite a long time. And so if this is true, then, I mean, agreeing on something bigger, such as fiscal federalism now, is going to take even more time, and probably never going to end those discussions about it. So you have to see what is happening on Europe. I'm mildly pessimistic, I'm sorry to say. And I think it's still very difficult to agree, to let 27 countries agree on something so radical, but we will see, and this is something that you should monitor. The second thing, and this is the transition for Asia, what is going to happen to Asia? Because a lot of people are saying, look at our CDS in Asia here, look at Greek CDS, Spanish CDS, they spiked 1 or 2 months ago. Look at here in Asia, we felt nothing, so Asia is really strong. However, my point is that financial contagion for Asia is very poor, because cross-holding of assets, of financial assets between Europe and Asia are very, very small. But the problem in Asia comes when the economy is affected. So if it's true that the economy in Europe is going to be affected so much in 2011 and 2012, then probably we are overestimating the potential of growth in Asia, because we are going to have an effect. It's not it's not because CDS have not reacted 2 months ago or 1 month ago that Asia is not going to be affected by an economic deterioration in Europe and in the US. You have a perfect example of this. Financial mess at the beginning of 2008 in Europe and in the US did nothing here, nothing. People were continuing to buy Asia. people stopped buying Asia and the economy really experienced problems in the last quarter of 2008 when the economy in Europe and the US was showing the real weakness. So you had an example, 2008 is a blueprint for what is going to happen in 2011, 2012 with lower growth in Asia because of Europe for once. Well, thank you very much for your attention. Thanks, Tom. Thanks.